So the markets have gotten beaten up this year. There's still a lot of fear out there from the trade tariffs and global turmoil. So question is it time to buy? Stick with me. My name is Brian Cannon, and welcome to Markets in 5. All right, we're going to explore a couple of charts today. The first one here is the S&P 500. A couple of things going on here. You can see that the RSI is just now starting to poke its head above the 50, which is good. That's a good sign. We still have this downtrend line that we need to break in order to feel comfortable that that we are out of the woods at this point, and it's green light on the market. So we're not 100% there yet. But there are a couple of things that are starting to align that seem to tell the story that we are headed that direction. We've got MACD here that is bottomed and starting to trying to make a recovery. So we've got to obviously build off of this a little bit. But and if you look at the trend line, there's no doubt it was broken, right? In a mean way. But at the same time, we've got a trend line here that has that was broken initially, but was reclaimed and starting to head up. So again, we've got to take out this overhead resistance first, but we're very, very close to it. So I think the next couple of days to a week in the market's going to be a very telling sign as to whether this turmoil is behind us yet for the market. All right, so if we take that same chart and we zoom in a little bit, I think it tells a little bit different story. Okay, so we've got clearly this overhead resistance that I discussed we need to get through on the S&P 500, and we're not through it yet. So we need to be a little bit careful still. And then we've got this red line here, which served as kind of a support in the past and resistance in the recent future. So we've got to get above this downtrend line, and we need to get above this red line to really have to breathe a sigh of relief and know that this is technically behind us. So we're not there quite yet, but I do think it's time to start dipping your toe in the water on some of the cash. Now, if we look at previous times where the market basically came up, popped above the 50 RSI and then head faked and headed straight down. That was in the context of a downtrending market. So it kind of came down, popped up, couldn't get above it, and the market fell further. So in this case, we're more in an uptrending market. So so if we do pop below it, my expectation is that we will hold and continue to move forward. So I do expect this market to break out here, unless some other news comes into play that's unexpected. But again, we've got MACD really starting to try to make a run, a recovery here. Now, what's interesting is during this prior kind of run at trying to recover off the bottom, there was no higher highs, higher lows put in. It was basically high, low, high, which was lower than this, and then it fell out. So here, where we came off the bottom, we came back up, we came back down, we've got a higher low now, and then now we've got a higher high. So again, it could bounce around this area for a while, and it could certainly drop down, but everything's, to me, looks like it really wants to pop above this resistant line and this resistance line. So again, if we can do that, we're going to be in great shape. But I do like the fact that we are starting to create a pattern of higher highs and higher lows. So if it can continue to do that, I think we're going to be in great shape. All right, and the last chart I wanted to show is the VIX, the volatility index. So it's a measure of fear in the marketplace as priced in by options. And you can see that every time that the fear gets overblown, it typically correlates with the kind of the bottom of the market. And so we certainly have been the market's been very fearful in the last several weeks, and it seems to have peaked in the VIX, the volatility index. The fear is starting to come down a little bit, and so again, as long as we can kind of break through those resistance zones I talked about, and as long as this VIX continues to drop, then I really do feel like that's going to be the signal that tells us the immediate turmoil is over. Not to say it can't happen again when the tariffs come back in play in 90 days and other headline news, but this is why we use technical analysis to really use our indicators to help determine, whether it's a good time to take risk or a bad time to take risk. There's always risk, and never are you right all the time. But if we use these indicators, it really does help lead us in the right direction. So in wrapping up, we don't have a full green light on the market to go fully in yet, but it is time to start dipping the toe in the water and be prepared for a breakout. So if you have any questions, give me a shout, and I'll see you on the next Markets in 5.